2 words, Revo Fitness. Here's a few more. Simple, 24/7, reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Glenelg or download the Revo Fitness app. RevoFitness.com.au or find the Revo Fitness app in the App Store.
Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. We've talked a lot lately about property in Australia and how it's been a mixed bag for investors across industrial, commercial, retail and residential. But once you drill into the sectors, there are some really interesting opportunities. Blackoak Capital is an Australian property firm that invests in and develops assets across multiple sectors, including office and industrial properties. But there's a growing demand for alternative real estate. And Blackoak's latest fund, Lumenate SDA Investment Trust 2, is deploying $100 million into specialist disability accommodation. Remember, this is general information only, and you should seek professional advice before making investment decisions. David Zimmermann is the CEO of Blackoak Capital. David, welcome to Fear and Greed.
Thanks for having me on, Sean. Excited to join you today.
Before we jump into disability, the investment trust and disability housing, how are you seeing the market, the commercial market more generally at the moment?
It's been an interesting period of time, sort of post the pandemic. We've seen a cyclical downturn in investment volumes in commercial real estate, particularly in the office space and retail. Industrial has been really trading extremely well, probably out of all of the asset classes. And the real striking thing is the rise of what we call the alternatives in commercial real estate, which is a very broad sector that covers everything from childcare, hotels, hospitals, student accommodation, etc., and is a relatively small sector in Australia, but growing rapidly.
Yeah, so just tell me about the growth, because we have heard a little bit of particularly around student accommodation, particularly around hospitals. The one we're talking about today, I must say, is new to me. How fast is that alternative market growing?
Well, it's growing fairly rapidly. To put it in comparative terms, give or take, there's about $300 billion estimated of office assets in Australia, roughly the same size industrial market. Retail is about $400 billion. Residential is by far the largest asset class at $11 trillion. The total alternative space is estimated to be at about $200 billion at the moment and growing.
Wow.
In relative terms, in the US, however, alternatives make up just under 50% of listed REITs in the US market. So in the Australian market, that is why institutional capital is so excited about the alternative space, because we are really maturing as an economy and we're seeing a lot of capital trying to access these assets as they become more and more readily available.
And how broad then can you go? If you've got that much money in the US, presumably that alternative market is extremely deep.
It is. The old analogy is that the Australian market lags the US by about 10 years. So
Right.
You've got a kind of decade to warm up and get ready for it. But you've got, student accommodation is a growing sector that you hear more and more about. It's a growing part of the Australian economy through education. Private hospitals continue to grow as an asset class. Traditionally, they were owner-operated, but now they're available on a traditional lease basis. Then you've got childcare. You've got data centres, which sort of sit somewhere between alternatives and industrial and are really getting a lot of attention in the media more recently. And then you've got the sort of medical and ancillary health space, aged care, and specialist markets like the specialist disability accommodation that we're involved in.
Okay, so let's talk about disability housing. It's part of the property sector that we don't hear much about. Why has it been overlooked, I suppose? And is it an area that you think will grow?
If you look at it in relative terms, Sean, it's a new asset class. It's been around for less than a decade. And the total market size at the moment of available assets is estimated to be about $3.6 billion. So it's all about relativity. If you look at, office and industrial at $300 billion, $3.6 billion is relatively small, but that's still a lot of real estate. You're seeing a growth in the sector from a zero base to $3.6 billion, and it's estimated to grow north of $14 billion over the next 10 years. So the reason that it's not widely spoken about is just because it is relatively new And it has been relatively small, but on a pretty rapid growth trajectory, we believe.
So when I think about retail, I can understand that. An office, I can understand that. Even data centers, I kind of can understand that. When you're talking about disability property, just describe what you're talking about.
So this is housing, bespoke housing that has been built for the most vulnerable people on the NDIS scheme. So to put it in perspective, depending on what statistics you look at, let's call it roughly 650,000 participants are on the NDIS. And within that, there's about 22 to 24,000 people that are eligible for specialist disability accommodation funding. So these are people with the most severe physical impairments, mobility impairments. And it's about creating bespoke housing that meets regulatory criteria to enable those people to reconnect back into society, to live in the suburban environment, like the majority of society, move them out of aged care, move them out of hospitals, move them out of grouped homes and into what looks like from the outside an average suburban house, but it's about 40% larger typically than a normal home because of extended hallways, larger bathrooms, larger bedrooms, larger kitchens, because you need a lot more circulation space for wheelchairs and for medical equipment.
It's a fantastic idea. Stay with me, David. We'll be back in a moment.
2 words, Revo Fitness. Here's a few more. Simple, 24/7, reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Glenelg or download the Revo Fitness app. RevoFitness.com.au or find the Revo Fitness app in the App Store.
My guest today is David Zimmermann, CEO of Blackoak Capital. Before the break, you were talking about exactly what disability housing is. You mentioned the NDIS. What's the relationship between specialist disability accommodation and the NDIS? Is it partly government funded?
So SDA is, the actual rent is entirely government funded, and it sits as a separate piece of legislation within the NDIS pool of legislation, the SDA funding. And again, Sean, it's about relativity. So of the NDIS budget, which is around, I think it's $48.7 billion in this current financial year, which is drawing to a close, of that, there is $700 million allocated to fund rental payments for SDA housing. So it's about 1.5% of the total budget of the NDIS. So it's a relatively small part, but still very material in terms of the total quantum of housing and rent available. What's interesting when you look behind the numbers, Sean, is that of that $700 million that's been allocated, and you hear all the time about cost blowouts in the NDIS and this rapid rate of growth in the budget itself, SDA housing, of the $700 million, we're only seeing about $4 to just under $450 million of that currently being utilised due to a lack of appropriately built housing stock that meets the criteria for the funding itself. So it's a market that's dramatically undersupplied, and it's a part of the budget that's not being fully utilised.
Okay, so let's bring the investment aspect into it, the Lumenate SDA Investment Trust too. It kind of sounds a bit like, as an investor, it's almost like an infrastructure fund, or because it's a government regulated, income is regulated by government, or at least paid by government. Am I right?
Yeah, look, we commonly refer to it as social infrastructure, because of the government elements to it and the fact that you're creating housing, and generally the tenants in your properties will be there for the longer term. You're trying to create forever homes. So it is a infrastructure-like asset that we are creating for investors. However, we will always encourage people to look at getting involved with people such as ourselves who invest in portfolios rather than avoiding doing one-off single assets, because that's where the real infrastructure part of it comes in, is having multiple assets with multiple tenants rather than a single property with one or two tenants.
Okay. And so normal investment questions, risks, returns, those sorts of things. So let's start with returns.
So look, the returns can be attractive. If you look at the actual NDIA literature itself, they expect real estate investors in the space to be making roughly around 11.5 to 11.8% internal rate of return. They are trying to encourage private capital to deliver the solution for government rather than the government having to outlay their capital costs. we would caution people against some of the people marketing in this space offering extremely high returns. You should be cautious. Some of those people are making claims that are, we think, inappropriate. You should be expecting to see somewhere in the, mid to low teen IRRs with relatively sensible amounts of gearing in the asset class. A lot of those returns will come through income from the government. A lot of our funds are generally delivering somewhere between 8 to 10% in annual income returns to our investors. And then capital growth looks fairly similar to traditional residential real estate because you are essentially building homes for people in suburbs with underlying residential land, 4 walls and a roof.
Which is pretty good if you're in Perth where you are at the moment, that's for sure. Okay, so what about the risks?
Look, the risks are, this is a highly regulated space. If you are working with someone in the sector who hasn't been involved in the construction process, they don't fully understand how tightly regulated it is. If your doorways are a millimetre out, they have to be ripped out. If the hallways aren't wide enough, you have to take walls down. There's a lot of compliance that goes into the design and consideration. The second biggest risk, the golden rule in real estate always is location, location, location. If you haven't done the research and you are building these assets out in, brand new subdivisions where the other social infrastructure has yet to be developed, shops, schools, public transport, etc., the demand isn't there. The tenants, your customers aren't there. The customers are living in suburbia where the infrastructure is that services their needs day to day. And so it is really important that you do the homework on where you're actually building the housing.
There's also an altruistic part to it as well. I mean, you can, as an investor, potentially you can feel, for want of a better term, that you are actually putting money in a good place.
Absolutely. Look, we are a for-profit organisation, and as a management team, we co-invest into all of our funds, and it does give you a fantastic feeling to create some of the outcomes that we do for our customers. And we will often, in our internal meetings, share stories of the tenants that are moving into our properties where we have just created fantastic outcomes for their families who have been through, years of inappropriate housing, and you're just creating really fantastic feel-good moments. And that's part of that whole kind of impact investing. And you get to see it, touch it, feel it. It's great.
David, thank you for talking to Fear and Greed.
Thank you, Sean.
That was David Zimmermann, CEO of Blackoak Capital, which is a great supporter of this podcast through Bluechip Communication. This is the Fear and Greed business interview. Remember, this is general information only and you should seek professional advice before investing. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.
2 words, Revo Fitness. Here's a few more. Simple, 24/7, reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Glenelg or download the Revo Fitness app, revofitness.com.au, or find the Revo Fitness app in the App Store.